there's no country in the world that's like really simple to do banking for crypto, which is kind of insane. No one like really talks about it. It doesn't need to be like that. It can literally change. Banks should serve companies like us.
Here we are with Sami Start, co-founder and CEO of Transak, one of the biggest fiat-to-crypto on-ramps. So Sami, thank you so much for joining us here at the Defiant.
Great to be here.
Sami, like I said, obviously Transak is kind of the place where crypto meets the real world.
Mm-hmm.
And it must be such an important and difficult challenge to make this global permissionless on-chain system actually onboard and offered into just traditional financial rails and fiat, with just so many different regulations in different jurisdictions and geographies and banking systems. So how do you handle these challenges?
Yeah, it's a great question, because actually that is the major part of like our value and our IP and what we bring to customers, right? If we didn't have all that stuff, a lot of our customers would probably just like build it themselves. And kind of unusual for like most tech companies, the first thing that we started working on when we were building the company was like banking and licenses and that kind of stuff. And this stuff takes a lot of time to get into place. It takes like many years to get into place. But right now we have entities in UK, we have 2 entities in Europe, we have entities in US, Canada, Australia, Hong Kong, India, and UAE. And then we have licenses either in all of those countries or they're on the way. So it's a very kind of operationally complex business, a lot of licenses. And then it's not just the licenses, but also the bank accounts take a lot of time as well. So it's always been very difficult to get bank accounts since the start of when we started building the company. Normally, if a startup wants to get a bank account, they just sign up and get a bank. For crypto, it's a much more difficult thing. So that's also a big part of the value in the IP, is that we connect into banks in different countries. We connect into different payment methods like Apple Pay, cards, other local payment methods. So it's a huge part of what we do and the value that we bring.
For crypto startups to start enabling their users to come on and offboard crypto to fiat, instead of having to have their own banking relationships, can they just set up an account with you? Is that how it works?
Yeah, exactly. So some of the use cases that use Transak, one of them is wallets. So we integrated with wallets like MetaMask, Trust Wallet, Ledger, Phantom Wallet. And in those cases, obviously those companies they're not custodial, they don't have any bank accounts. They're mostly just front-end client-side applications. So in that case, Transak is a way to top up your wallet, right? You download a wallet, you're a first-time user, it's empty. You click buy crypto, Transak pops up. You choose your payment method depending on the country you're in. So let's say you choose Apple Pay, you want to buy some ETH, click, Apple Pay done, the ETH arrives in your wallet, right? That's one use case. Another use case could be more of like a payments type use case. So for example, like an exchange or a fintech might integrate Transak in order to onboard the user from fiat into stablecoins. And there, the blockchain becomes much more of a payments infrastructure rather than like a speculation buy crypto type tool. So there's different types of use cases and people use Transak in different ways. But the overall base of what we do is on and off ramps. So exchanging between fiat and crypto, and exchanging from crypto to fiat across a wide range of payment methods, across different chains and tokens.
And do you custody users' funds, or is that usually left for the startups themselves?
We do not custody funds. So are we in the flow of funds? Yes, 100%. So we definitely touch customer funds. We reconcile payments, we send payments. We do tens of thousands of transactions a day where we're automating them and sending money to different places. But we never hold funds. So there's no person on this planet who has a balance with Transak. So that's also one of the primary differences between us and a crypto exchange, like let's say Coinbase or Binance, is that we don't hold user funds. We send the crypto to a wallet that's either owned by the user or by an application on behalf of that user.
Right.
So whatever happened with FTX, that could never happen with Transak because we don't have a balance. So we see Transak as much more in the ethos of decentralization and self-custody. And it's more about enabling people to use blockchain applications rather than just buying crypto and holding it in a custodial account and hoping the price goes up.
That makes sense. And speaking of that, I'd love to learn more about how you came with the idea of Transak, kind of the initial genesis of it, the ethos behind it.
Yeah, so my background is actually more in like Web2 fintech, and I was working as a software engineer in a B2C fintech company, and a big part of what the company did, like more than half of the resources of the company, like the staff, the engineering resources, the operations, was devoted into depositing money into that. It was an exchange. It was a prediction market exchange, but more than half of the resources was all about like depositing the funds. And then the rest was actually like running the exchange and running the app and that kind of stuff. And that same thing is true for every fintech around the world. So like if you look inside any B2C fintech company, whether it's Robinhood or Interactive Brokers or any B2C fintech, integrating all the different payment methods, doing the KYC is a big part of what they do. Even though there are vendors for that stuff, it's still like a big effort. And I thought that was crazy. So I initially started as an entrepreneur trying to solve this problem from like a Web2 angle, like looking at open banking, like Plaid type stuff. And then in my spare time, I was into blockchain and smart contract programming, just kind of like as a hobby. And then eventually connected the dots and saw that in the future, all financial applications would be blockchain applications. And that the way to onboard would be on Onramps. And so like any financial application would just use crypto, and you would sign in with your wallet and you would have your funds available, and that onboarding would be reusable between all of those different applications. So the ethos from the start was always around onboarding, reusable identity, reusable funds, allowing any person anywhere in the world to access any financial application in one click. And that's kind of how I got started on it. And then my co-founder Yeshu also was working in a crypto exchange before as a CTO there. And he was kind of working on a similar problem, like from a similar angle. And then we kind of joined up, and that's how we got started.
Nice.
Yeah.
And so you said you're about enabling Web3 dApps to, for users to get their fiat to crypto and vice versa, but remain hopefully non-custodial. Can you do this without KYC, or do you still need to perform KYC on users?
You need to do KYC. Well, from a legal compliance point of view, you need to do KYC. From a user experience point of view, you can always make that better, right? You can make it feel like you don't have to jump through so many hoops. It doesn't need to be a torturous experience. But from a legal compliance point of view, you need to do KYC in order to sell crypto to someone.
And going back to the question of this main challenge of dealing with so many geographies, and banking systems, and as you mentioned, like one of the big problems for crypto startups is this difficulty of getting banking licenses, and hopefully you can help improve that issue. But even here in the US with Operation Choke Point 2.0, like we saw, the big problem that the industry has. How have you seen that evolve? I mean, you've been, dealing with these issues for years. Have you seen it getting better at all, or worse for crypto to establish just, working banking relationships in all these different countries? And maybe if you see differences between geographies, would be interesting to hear.
Yeah, so firstly, in the US, Operation Choke Point 2.0 is real. It's a real thing. And it's kind of like it's some kind of implicit regulation, right? Instead of doing explicit regulation and saying you can and cannot do certain activities in crypto, there was some kind of implicit move that basically told banks you cannot work with crypto companies. And we've really felt this, right? It's very, very hard to onboard with banks. And most of the banks that serve crypto companies like us for crypto transactions, they have a limited number of banks that they can work with, right? So if they want to onboard with Transak, they would need to kick off like Kraken or Coinbase or something like that. So it's really limited in what they can do. And it doesn't really make any sense because for the bank, there's not a lot of risk, right? Most of the risk is on us. We're the ones who are dealing with all of the chargebacks and the fraud and the money laundering. That's been frustrating and disappointing in the US, but I am optimistic that that's going to change. I think the regulatory environment is changing in the US. The same thing is true in UK and Europe. To a lesser extent, it's not as hard, but it's still not easy to get banking. India, it's also very complicated. You know, there's conflicting messages coming from like the Supreme Court and the RBI. So it's very difficult to do business there as well. So there's no country in the world that's like really simple to do banking for crypto, which is kind of insane. You know, no one like really talks about it, and I think people maybe feel like nervous to talk about it because it's things that like involve governments or something like that. But it doesn't need to be like that. It can literally change. Banks should serve companies like us.
Absolutely.
Yeah.
So interesting that what you're saying, that basically everywhere crypto has issues establishing banking relationships.
Yeah, I can't think of any country where it's been like really straightforward.
Wow.
Maybe Hong Kong, it was like a little bit easier. But yeah, every country, it's pretty complicated. And
how have you seen that trend go, if anywhere? Like, have you seen it improving or deteriorating in the years since you started?
It's better. Yeah, it's better. I mean, we've been doing this like 6 years now, something like that, and it's definitely gotten better. There's more options. The banks are more advanced. They've like got better APIs. They know how to work with companies like us better. But bigger banks like, let's say, JP Morgan or Bank of America, like that kind of stuff, they still don't serve companies like us. So that's like the next step. Once those guys start opening up, I think things will change quite drastically. Are you optimistic that that's kind of close? I think that the answer is yes, but not by choice for them. Because I think like we've got this stablecoin bill coming up. I think regulation is going to start changing. But I believe that what we do cannibalizes the banks. I don't think it's good for them. If you move people onto crypto and stablecoins and you make that very easy, you give people access to a lot of remittance services, investment products that are on the blockchain, then why do you need a bank? So I think the answer is yes, but not by choice. Interesting. And another trend I wanted to talk about is, you have a really interesting position to learn firsthand about the type of volumes that are being handled in crypto, which obviously gives a sign on how much crypto is being used worldwide. So if you can, I'd love kind of also your view on that trend, how volumes have increased or decreased in the past kind of a year since you started operating, and kind of if you can share kind of the latest figures for volume transacted. Yeah, sure. So 2024 for us was around a 3x growth in revenues as compared to 2023. So, pretty healthy growth, like quite happy with that. And what we're seeing in 2025 is we're starting to see a trend where bigger companies are starting to adopt crypto, and we're starting to see much bigger deals coming onto our plate. We're talking like Web2 companies, fintechs. And so there's a lot of announcements in the press right now, like companies like Klarna, Robinhood, Revolut, Fidelity. All of these guys are kind of doing stablecoin plays. They're all doing like crypto blockchain plays. And so I think that's going to really start kicking off towards the end of this year, and volumes are going to start growing. And the distinction for this year is that we're going from crypto being a speculation asset class to blockchain being an infrastructure that's used in finance overall, in banking overall. So I think that this is going to be an extremely exciting year where volumes are going to pick up quite a bit.
Interesting.
Yeah.
Of that volume, can you provide a rough breakdown between how much of it is in stablecoins and how much of it is in kind of rest of crypto? Or I don't know, like how you break it down, maybe like Bitcoin, stablecoins, rest of crypto, or, you know.
Yeah. So we're around 30% stablecoins at the moment. So stablecoins is a really significant part of what we do. And that tends to be more like payments use cases. So people using on and off ramps as a way to move money in different ways. The rest of the volume is split between like ETH, BTC, Solana, kind of most of the assets that you'd expect, like on a crypto exchange like Coinbase, something like that. It's pretty much what we do. We do see the stablecoin side picking up significantly over the next couple of years. So we're really excited about that.
You mentioned the stablecoin bill. If that passes, how do you think it will impact the industry?
Well, right now, stablecoins is basically unregulated money movement. If you're in a stablecoin, you can do whatever you want with it. There's not a lot of regulations stopping that, as compared to using banking rails or card rails. There's a lot of like rules and regulations. There's a lot of checks and balances that are in that. So in some sense, there'll be a lot more regulation on using stablecoins, which I think is a good thing. You know, it'll provide more safety for users and more clarity for businesses that want to use stablecoins. A crazy effect of this could be that banks like Bank of America, JP Morgan, HSBC issue their own stablecoins and start to compete with Circle and Tether and these kind of guys. And if you think about what a stablecoin is, it's basically like a Web3 bank, right? You're basically depositing money on there, and you're having some kind of balance. That's kind of what a stablecoin is. It's like a bank balance that's sendable and usable anywhere in the world. And so I think this could really disrupt the banking sector in general, and it could cause them to really change their practices. And I think the banks have kind of been preparing for this. There have been a lot of like blockchain projects in most of the major banks, but we're going to really see how that plays out now. I think it's going to be super interesting.
So if banks really do start issuing their own stable coins and just becoming more, integrating crypto more fully, how do you think that will change things for both banks and Web3? It'll add just a massive amount of competition to the space, and what do you think? How do you think that plays out?
I think that it's kind of it's going to be like an unbundling of banking services. So with a bank, the bank doesn't make money from deposits and withdrawals. The deposits and withdrawals are free, as compared to like a Transak or a Coinbase, where like we make money on the transaction fees. A bank actually makes money on all the other services. They make money from earning interest on your deposits. They make money from other services like FX and investments and overdrafts and that kind of stuff. And when you have a stablecoin, especially if it's a permissionless stablecoin, that's when you kind of unbundle all those services, and you can use a bank, let's say with JP Morgan Chase, but you can have access to like all these other products with anyone else. So it kind of lowers the barrier to entry of using your funds elsewhere and also internationally. And so and it's not just banks that will issue stablecoins. Also, fintechs can issue stablecoins, right? So any B2C fintech app can issue their own stablecoin and basically compete with a bank. And there's this joke that like every fintech tends towards being a bank, right? Like TransferWise tends towards being a bank, Revolut bank, Klarna bank. You know, everything is like eventually kind of going towards being a bank. And so it basically opens up And then also wallets are now also going towards being banks.
And exchanges.
Wallets,
Coinbase,
exchanges.
Yeah.
And then Transak basically becomes like a B2B infrastructure to build a bank because we provide the rails of like moving money in and out. And what we believe is that blockchain is not a front-end consumer technology. Blockchain is a back-end infrastructure technology. And people are not going to call them blockchain applications. In the same way you don't call it an AI app, like I'm going to use an AI app. It's just something that is in the back end and it makes that application better. And so I believe that it's going to level the playing field and people will be able to use products like Transak and Stablecoins in order to make applications that feel like banking applications with like very small teams. You could be like a team of 10 people and compete with JP Morgan.
In that sense, what's the big challenge for you to remain kind of, the main rails for this? Is it keeping your costs down? Is it UX or a mix of both? Like, where are you like really trying to focus your energy and innovation?
So the fundamentals of what makes Transak good is price. So price is very important. Conversion rate. So out of 100 users who go to convert fiat to crypto, how many of them complete that? There's also payment method coverage, fiat payment method coverage. So different payment methods around the world. There's blockchain coverage and tokens. So having all of the blockchains and tokens that the user needs. And then a final part of it is also the developer experience. And what Transak is doing is providing a very modular developer experience so that you can have building blocks for KYC and payments and having more API-based access. And that means that Transak can be used in a wider range of use cases. So we're not trying to create the applications. We're not trying to make the best UX. We're just trying to provide the building blocks for people to do that. And by providing the best, most modular APIs, we can be applicable in the widest range of use cases.
In terms of price, like what innovation can you provide there to make those transaction fees even lower?
So this is all about the boring stuff, right? Like getting licenses, getting local bank accounts, getting scale as well. So our costs typically come from payment processing. So like interchange fees, scheme fees, like that kind of stuff, gateway fees, banking costs. Then on KYC, then on risk and compliance. That's kind of our cost of delivering a transaction to the user. And as we gain scale, all of those costs come down. As we expand into new geographies, our costs come down in those geographies. We become more competitive globally. And then also, as we're also gaining more users, users are able to reuse their KYC with us. So if you KYC once in, let's say, MetaMask, then you don't need to KYC again when you use us in, let's say, like a game from Immutable, something like that. So as we're gaining scale, our costs come down and we're able to provide lower fees to our partners and our users.
Interesting. That's an interesting point about kind of reusing the same KYC process, across different dApps in Web3. And related to that, I saw a recent announcement that Transak is being used as an on-off ramp for Uniswap. So I would love for you to kind of expand a bit on that and how you are connecting to different DeFi dApps, if we can expect other DeFi-related announcements in the near future. Yeah,
so the announcement with Uniswap, we're providing off-ramp services in their wallet. It's one of the fastest up-and-coming wallets. It's a really great UX and obviously provides a great interface into using the Uniswap DEX. So we're really excited to be a part of that. And we think it's a really interesting theme at the moment that centralized exchanges are kind of declining in volume relative to DEXs, and people are gravitating more towards DEXs at the moment. And so like fiat on-off ramp plus DEX equals access to basically any token, which is quite a cool and powerful combo that we're excited about. In terms of DeFi generally, we have a product called Transak One, which we're rolling out with some of our partners right now, which allows you to do an on-ramp and execute a smart contract and pay the gas fees in one step, hence the name Transak One. So for example, you could buy some USDC and then deposit that into like Aave or Compound, and then or do a swap on Uniswap and pay the gas fees. And from a user experience point of view, it looks like I'm just depositing, let's say, $1,000 into Aave. And so again, we're kind of penetrating this market more as a back-end infrastructure technology rather than a front-end consumer technology. We don't think that a lot of the volume is necessarily going to come from the protocols themselves. Most of the volume will probably come from like wallets and fintechs that integrate these protocols and offer them to their users, because the users don't really need to like know or understand what a smart contract is. They just need to have access to that. And the fiat on-off ramp provides a layer of abstraction where you like don't really know that the blockchain even exists. You just have a better financial service for you. Yeah,
it makes sense. This is one kind of view that I've seen some people have, which is that DeFi will start being more of a kind of back-end service for fintechs and banks than a destination where users, go to exchange or swap or lend and borrow first. Do you believe that?
Yeah, 100%. And the most obvious use case is cross-border remittance. So right now, using the Swift networks, it can take like days or even over a week to make a transfer between a different country. You can pay like multiple percentage points in order to make that transfer in terms of like spreads and fees. And with a stablecoin, it's free, right? It's just it's absolutely free. It's absolutely instant, and that's the case for any country around the world. And so if you're a fintech, why would you not leverage that? And I think the problem that a lot of people have with crypto and Web3 is they want to decentralize everything, and they want everything to be like a dApp right from the get-go. But let's just be happy that we have this like very, very monumental improvement in how we move money, and let's integrate that into our existing applications. And you already have a global user base in which to launch that. And that's exactly what's happening, right? So all of these announcements from major fintechs shows that that's what's happening, and it's going to happen fast.
Super interesting. Okay, and in kind of that sense, to wrap up, what are the next milestones for Transak?
So right now we're moving very much into the stablecoin direction, more infrastructure direction, and we're starting to do some more partnerships with more Web2 fintechs and offering services for them, and basically allowing wallets and fintechs to become like their own banking infrastructure, to become their own banks, and providing the tools in which to build those building blocks, and allowing fintechs to use blockchain as a backend infrastructure technology and provide a seamless interface where the user doesn't need to know that it even exists.
Do you, finally, I think like an underlying theme of the conversation has been kind of like fintech and crypto versus banks or versus like traditional banks. Do you see that, how do you see that tension resolving in, I don't know, next 10 years?
So, I see it kind of like what the internet was for Blockbuster, right? So Blockbuster, they had DVD rentals. You like went into the store and then like now you have video that's available on the internet. You don't need to do that anymore. So I think that this will cannibalize what the banks are doing. And for example, Netflix initially was doing like physical DVDs as a mail order service, and they adapted. And I think some people will adapt and they will embrace this technology, and they'll become much better applications as a result, and it'll be much better for consumers. And some people will fail to adapt, and they'll just disappear.
And blockchain will win in the long term.
Yeah. I mean, in the medium term, we'll use stablecoins, and that will be an infrastructure for fintech applications to get better. In the long run, we can move on to decentralized currency without monetary policy, right? So Bitcoin or ETH or whatever, and there doesn't need to be any fiat at all.
So what happens to Transak when there's no fiat?
That's a great question. So the role that Transak plays, payments is actually a very easy problem, right? Like just moving money is just basically subtracting a number from one place to another place, right? Like minus 100 from here and plus 100 here. Okay, that's a $100 payment. The difficult part is all about risk and compliance and fraud and AML. So like I recently had to make a larger wire transfer. I tried to do it on the application of my bank, and they told me, no, you can't do this. You have to come into the branch and do it, which, you know, is frustrating, but understandable, because the reason they did that is like a lot of people got scammed. And that problem doesn't go away when fiat goes away. People will still get scammed. There'll still be money laundering. There'll still be terrorist financing. There'll still be sex trafficking, like all these kind of bad things, and a lot of scams. And so the role that Transak plays is a compliance identity layer of making money move safely and doing onboarding safely into applications. And that doesn't go away when fiat goes away.
It's just another type of currency that you're performing the same sort of checks on.
Yes. So you still need compliance, you still need risk, you still need onboarding, you still need identity. And those things will all exist. And then the money movement will still exist. But perhaps the conversion of fiat to crypto won't exist.
Wow. Amazing. Such an interesting kind of long-term vision for you. And yeah, it seems like you are kind of gearing up to be kind of this key piece of infrastructure for our world. And even if fiat is gone, and hopefully, you know, crypto makes finance a lot more efficient. You can still be a key piece of infrastructure there, making sure kind of money movements are safer.
Yeah, basically allowing people to do whatever you'd expect a bank to do, but just without a bank.
Right. Awesome. Sami, thank you so much.
Yeah.
This was super interesting. Really appreciate you taking the time.
Yeah, thank you also. Yeah, it was great fun.